In this video, we're going to learn about the magic of Fibonacci levels, and I will show you how to use Fibonacci retracements and extensions to understand trend symmetry and to time your trend trades in a much better way. So you probably all have heard that trends move in waves, and this is what it looks like. We have uptrend waves, downtrend waves. We call the waves with the trend impulsive waves, and the waves against the trend we call them counter trend or correction waves. But did you know that there is a hidden symmetry behind those trend waves? And the Fibonacci tool helps us explore those trend symmetries. So what we are doing with the Fibonacci tool is that we're always looking for this ABC pattern. The ABC pattern is the beginning of an impulsive move to the end of the impulsive move, and then from the impulsive top to the low of the correction wave. And that's where we are drawing our Fibonacci tool. So we're dragging the Fibonacci tool from the beginning of the trend wave to the end of the trend wave. So this is the end of the trend wave, this is the beginning of the trend wave. Those are the settings that I'm using. What is different about my Fibonacci settings is that I'm using the reverse function. I've been trading for 16 years and I found that the reverse function is a much more intuitive way of drawing the Fibonacci tools. You can just pause the video, copy it, and then set up your trading view the same. The most important and the most interesting thing that we get out of this is that we can measure the distance of the correction wave. So this is the end of the impulsive wave, and this is the low of the correction wave. And as you can see, we fall right into this level, which when you turn on reverse, it's 61.8. And what you will often see is that the following trend wave is then going into the Fibonacci extension 161.8. And you can see after the market has hit 161.8, it is reversing. So the Fibonacci tool helps us, after we know the length of the trend wave and the length of the correction wave, to time the next trend following wave. And that's why it's so powerful. So I mentioned trend symmetry, but what do I mean by that? For that, we measure the distance of this trend wave here that we have from 0 to the 100 level. And then when we know where our correction wave ends at 61.8, let's drag our arrow now to 61.8. And you can see from 61.8 to 161.8, it's the same length. The length of the arrow from 61.8 to 161.8 is the same length as from 100 to 0. And what this means is that very often trend waves have the same length, and that's super interesting and fascinating once you understand this and wrap your head around this. There's a certain amount of bias here, and there's a certain surplus of bias here that drove the price from here to the end of the impulsive wave. And once we know where the end of our correction wave is, we often assume that a very similar balance between buyers and sellers is still present in the market. And that's why the following trend wave is often, of course not always, but often equally long. So afterwards we have another trend wave sequence, another ABC. So here's the next start of the impulsive wave, that's the end, and then we have our correction wave from here to here. And again we can apply our Fibonacci tool here. So we drag it from the start of the trend wave to the end of the first trend wave. We just extend it a little bit to the right. And then you can see we overshoot here 38.2 a little bit, and then we have another 161.8 extension. In this case, the following trend wave is a little bit longer. So again, when we measure here the distance from 0 to 100, now when we go to the 38.2, you would expect naturally that the next trend wave is going to 138.2, but in this case, it's overshooting the area and it's going to 161.8. And of course, as we all know in technical analysis, nothing works identical, nothing works the same 100% of the time. And that's where discretion comes in. So when you start using Fibonacci areas and Fibonacci extension levels, instead of blindly just putting your take profit target at the 138 because we had a 38.2 retracement, analyze the price. When the price is hitting 138 here, the price is not slowing down, it's still going very strong. So then you can take your trade to the next Fibonacci level, 150. And then if the price is still strong and not retracing, go to the next one and lock in some profits there. And that's how you can then approach your trend following trading. No matter which trading book you read or which trading podcast you listen to, a trading journal will always be mentioned as the most important trading tool a trader needs to have. That's why we developed the H1 Trading Journal. And currently we run a promotion. So for Tradeciety followers and fans, go to h1.com, and when you buy your H1 Trading Journal, use the discount code Tradeciety to get the biggest possible discount. Gold has been super fascinating over the past few months, and the Fibonacci's work here exceptionally well. We have an ABC pattern here from A to B, C. So let's put our Fibonacci tool either at the low or where you see the beginning of the trend wave. There's no right or wrong, but when you start using Fibonacci's, make sure that you pick one approach and then apply it consistently over all of your chart analysis. So what we see here is that from here to here, then we have a retracement to the 50% retracement level, and then the market goes to 150, 160, and ultimately a little bit higher. So you can see we do have the 200 Fibonacci level, and sometimes you will miss those big explosive moves. However, over the long term, you're usually much better off to go for what is safer. So on most occasions, you will probably not reach a 200 extension, but most of the time the price will reach the area between 138 and 161. So this is what we call the sweet spot here. That is the golden zone for the Fibonacci's. Don't be too greedy, don't shoot for the 200 all the time, and instead look at how the price is behaving in this sweet spot zone between those three Fibonacci levels. We can also use the Fibonacci's on a longer term perspective and a longer term trend sequence. So for example, here we see an ABC pattern from the point A to point B to point C here. Let's see what this tells us about the price action. So we have point A here, point B, we have the retracement that almost hits the 38, but for that we will count it as 50. And then you can see the price is hitting 150 on the dot, and then it's starting to reverse a little bit, making lower highs and showing more signs of weakness. So whether you're using Fibonacci for short-term or long-term, both can work. And within a Fibonacci sequence, you will find short-term Fibonacci sequence. So now we have mapped out this long-term Fibonacci, but within the long-term, we have short-term Fibonacci levels as well. So here we have the ABC pattern in this short-term movement, and let's put our Fibonacci in this here. So from the bottom to the top here of this trend wave, let's get rid of the long-term one. You can see we have a very nice 61.8. The price is reaching 161.8 and then ultimately reaching the 200. But let's put on the long-term level again. So now we have two overlapping Fibonacci's, the long-term and the short-term. And you can very interestingly see that the two Fibonacci's overlap here very, very nicely. So we have the long-term 138 and the short-term 200. And those are then very, very important cluster levels where you see that more than one Fibonacci level is meeting. You can also add to that round numbers, support and resistance, or any other tool that you like. Don't use Fibonacci on themselves or by themselves, but instead integrate it with other tools that you are using. Fibonacci doesn't only work on the way up, but of course we can also use it in a bearish market. So for example, here the market seems to have topped out and we start seeing Fibonacci sequences here on the way down all the way. So what we can do is again use our Fibonacci in this time. In this case, we draw it from the top to the bottom of the trend wave. Very, very nice 138 retracement. The market is struggling a little bit around the 138 and the 150 level. So that could have been a good place to either take full profits or at least take partial profits. Eventually, the price is hitting the 200. But again, as I said, this doesn't happen very often. And don't be greedy. Don't always expect the market to reach 200. It is usually much better to go for what is safer and not play with your profits, and don't let your trades run too long.